Hey everyone, welcome back to Corporate Decoder, the place where we break down the money secrets of big companies. And today we have a real doozy. Werner Enterprises, Inc. its latest annual report for the year ended the 31st of December 2025. So buckle up because we are about to decode some serious business juju. And if you love getting these insider looks at company filings, make sure you are subscribed and join our Discord. Community link down below to keep the conversation going. Let us dive right into the heart of the matter. Werner Enterprises wrapped up 2025 with total operating revenues of about $2.97 billion. That is a slight dip from 2024's $3.03 billion. It might not sound huge, but in the world of big business, every percentage point matters. Now let's talk about operating income because that is the real money maker for a company. And here is where things get interesting in 2025. Their operating income plunged to just $11.7 million. That is a massive drop of 82.4% from $66.1 million in 2024. Remember that slide means less money for growth for investments and for shareholders. Breaking this down further, their main business truckload transportation services, or TTS, took a big hit. Its operating income fell from $75.2 million in 2024 to just $16.4 million in 2025. They saw revenues decrease by about 4%. On the brighter side, their Werner Logistics segment actually grew. Its revenues went up by 3.1%, and it managed to squeak out an operating income of $6.7 million in 2025 after a small loss in 2024. This part of the business is definitely showing some promise. So what caused that big income drop in 2025? Well, a huge chunk of it comes from restructuring and impairment costs totaling $44.2 million. This sounds like they had to cut losses on some parts of their business or write down the value of assets. Their biggest expense, salaries, wages, and benefits dipped slightly by 3.3% to $1 billion. This sounds good, but it also reflects fewer miles driven and likely fewer employees, which ties back to that revenue decrease. Fuel costs are down by 10% to $247.8 million. That is great news for Werner because lower fuel prices mean lower operating expenses. Now this next one is a biggie. Insurance and claims expenses dropped by a massive 20.2% to $116 million. What happened here turns out they had a favorable legal decision in a lawsuit from a 2014 accident that reversed a huge liability. This significantly boosted their 2025 results. But it is a one-time gain, not a sustainable trend. On the flip side, rent and purchase transportation costs jumped up by 6.9% to $902.8 million. This is a significant expense, especially for their logistics segment where they rely on third-party carriers. Digging a bit deeper into the legal side, we see an $18 million settlement plus $3.4 million in legal fees related to consolidated class action lawsuits, named Abaca et al. V. Werner, this shows the ongoing cost of legal battles in the transportation industry. Putting it all together, Werner Enterprises ended 2025 with a net loss of $23 million. That is a dramatic turnaround from a net income of $33.6 million in 2024. This is definitely a red flag for investors. Looking at their fleet size, the average number of tractors in service in their TTS segment decreased by 2.4% to 7,437. This indicates a contraction in their core trucking operations. A significant development is the acquisition of First Fleet in January 2026 for $245 million. This is a big move to expand their dedicated trucking business and add scale. Financially speaking, they bought back over 2.1 million shares of their own stock in 2025, costing them $55.6 million. This can be a way to boost shareholder value, but it also means less cash is available for other investments. Their accounts receivable stayed relatively stable at around $395 million, which is a good sign that customers are paying their bills. But the allowance for doubtful accounts also increased slightly, indicating a bit more caution about who might not pay. The value of their property and equipment net of depreciation fell from $1.93 billion in 2024 to $1.79 billion in 2025. This suggests they are not investing as heavily in new trucks and equipment, which could impact their long-term competitiveness if not managed carefully. Goodwill remained flat at $129 million. This is the premium they paid over the fair value of net assets in past acquisitions, and it suggests no major new acquisitions that significantly altered this figure. Their total liabilities decreased slightly to $1.5 billion in 2025 from $1.56 billion in 2024. This is generally a positive sign as it means they owe less to others. Stockholders' equity also saw a decrease, though it remains substantial at $1.36 billion. This reflects the net loss in 2025 and the share repurchases. Cash flow from operations took a significant hit, decreasing by 44.9% to $181.8 million in 2025. This means less cash is coming in from their day-to-day business operations, which can impact their ability to fund operations and investments. In terms of investing activities, they used $171.6 million in 2025, compared to $241.4 million in 2024. This indicates they spent less on long-term assets like equipment, which aligns with the decrease in property and equipment values. Financing activities were a bit mixed overall, but showed a positive stance by providing $7.3 million in cash in 2025, compared to using $105.7 million in 2024. This change is mainly due to taking on more debt. They repaid $320 million of long-term debt in 2025, but also took on $425 million in new long-term debt, indicating a refinancing effort. Now let us talk about the auditors KPMG LLP giving their stamp of approval on the financial statements. They noted the insurance and claims accruals as a critical audit matter, meaning it involved complex judgments and estimations. Looking at their allowance for doubtful accounts for trade receivables, it has increased slightly, which is a minor concern that they are a bit more worried about customers not paying. The big story in 2025 for Werner is that massive restructuring and impairment provision of $44.2 million. This includes significant write-downs on intangible assets and revenue equipment. When we look at other expenses, the net amount increased by 37.1% to $32.4 million. This is largely due to a drop in investment income and higher interest expenses, which makes sense given the increased debt load. Income tax expense plummeted by 75.2% to just $2.2 million. This is mainly because their pre-tax income was much lower, and there were some favorable adjustments related to deferred taxes. And that brings us back to the bottom line. Werner Enterprises experienced a net loss attributable to them of $14.4 million in 2025, compared to a profit of $34.2 million in 2024. This is a truly significant shift and signals a challenging year. Looking at their segments, externally sourced revenues for truckload transportation services, or TTS, were $2.04 billion, while Werner Logistics brought in $856.8 million. It is clear TTS is still the lion's share of their business. The reconciliation of operating income shows that after accounting for various inter-segment adjustments and other operating items, the consolidated operating income was $11.7 million, which confirms that tough operating environment. Geographically, most of their revenue, $2.84 billion, comes from the United States, which is no surprise for a domestic carrier. However, revenue from Mexico is down significantly to $120.4 million from $147.8 million. In 2024, this could be a sign of trade friction or logistical challenges in that region. Overall, their total revenue from foreign countries dropped by about 23%, which highlights a potential area for concern or strategic reevaluation. And remember that big First Fleet acquisition in January 2026 for $245 million plus an earnout. This is a bold move to grow their dedicated operations and diversify. So what is the verdict on Werner Enterprises based on this report? 2025 was a really tough year. Their core trucking business struggled, leading to a significant drop in operating income and a net loss. However, the Werner Logistics segment shows growth potential, and the acquisition of First Fleet signals a strategic push for expansion and scale. They are clearly navigating a challenging industry with rising costs, competitive pressures, and ongoing legal battles. The good news is they have a strong credit facility and a history of dividend payments, but the increased debt and the net loss are definite points of caution. Moving forward, their success will depend heavily on how well they integrate First Fleet, manage their costs, and navigate the volatile freight market. The legal settlement and the one-time gain from the accident lawsuit mask some of the underlying operational challenges. The strategy seems to be one of consolidation and focusing on more profitable segments, but executing this effectively will be key. Alright, that is our deep dive into Werner Enterprises 2025 annual report. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.